Ladies and gentlemen, welcome to a new episode of the Fintech Hunting Podcast. We have a wonderful guest for you today, a top performing loan officer. He helps real estate professionals market and grow their business. He's an industry thought leader and just an overall great guy. Please help me welcome Jeff Thomas, Senior Loan Officer at Atlantic Coast Mortgage. Jeff, welcome to the show.
Hey, Mike, thanks for having me on today. I appreciate that.
Well, it is great to have you. Jeff, you and I have had a number of discussions. We've been in the weeds of what's going on in the industry this entire year. But before we jump into all of that stuff, for our listeners who don't know you, tell us a little bit about your background, how you got into the mortgage industry, and kind of what part of the market that you serve.
Okay. Well, I've been in the mortgage industry since 1993, October of 93. I'm in Northern Virginia, just outside of DC, 25 minutes though, depending upon the traffic. I got into the business, a friend of mine called me up. I was working at my parents. I come from a small business. My parents had a couple of different businesses growing up. And so I was helping them, and he called me, and here we are.
Fantastic.
Some odd years later.
You have a wealth of experience, and I want to start kind of diving into that. As we talk about the mortgage market, it's been a crazy year. We've dealt with COVID. The global pandemic is still going on. Rates have still been historically low. Refis have slowed up a little. Purchases have increased. Give me some of your observations of the industry this past year, especially coming from your vantage point of a loan officer and working with realtors and borrowers.
Well, that's a good question. It's obviously been a tight market for buyers. Sellers have been they've had the advantage. They've basically chosen whatever offer they've wanted. So buyers have been bombarded with multiple contracts, multiple offers, which a lot of them just dropped out. Probably August, September of last year, I had a number of clients that they quit calling. They're like, I'm putting this on hold until next year. And so that's where we are on that part. But it's, our area is a little bit cloistered from we don't have all of the, being with the government right near us, we're kind of safe haven from a lot of the bad things that have happened over the years throughout the country. So the COVID part really didn't hurt us too much, but it's still a challenging market here as well.
Well, and you talked about it, low inventory has been an issue, right? The good news is rates have stayed pretty low. If you refied last year, you're not going to refi again, but the rates are still low. So let's talk a little bit about, as we look at some of those trends from a loan officer perspective first, what were some of the biggest challenges that as a loan officer you had to deal with this year?
The biggest one was if we start at the top for purchases, it would be having an offer accepted. Then once the offer was accepted, it was figuring out how best to present the client in the best way. A lot of contingencies were removed, so we had to work our way around the contingencies and then figure out, with rates being as low as they were, we had to get the appraisals done too. Even though if an appraisal's waived, we still have to have one done unless we received an appraisal waiver. That was one of the few items that was good that came out of COVID, because the appraisal waivers were loosened up. So we were receiving more appraisal waivers, which they're tightening those strings again.
Exactly. Well, and you mentioned it's about adapting, right? A lot of people, they're fighting for bids, so they're like, hey, I'll waive the appraisal. I don't think I would ever do that, and hopefully none of our listeners will ever just waive the appraisal. But in a tight market, when a borrower has lost 3 bids, 5 bids, 10 bids, and they're worried they're never going to get the home of their dreams, you start looking at the market a little bit differently, right?
You do. You're like, should I wait? should I jump in with both feet? Should I take that offer that's 10,000 over the list? And it's really running through those wait or what's going to happen next year. Because if interest rates go up a half a point, which they're rising now, and the property values go up, well, what is that? If you paid 10 grand more, you're still making, probably not all the time, you might still be making a really good financial decision by purchasing it, even paying a little bit more than the list price, because in the end, in a year, you'll have the equity back, because the appreciation around in the Northern Virginia, DC area has just been astronomical, at least 5 to probably more like 10% in some areas.
Well, I love that insight, because I think a lot of people say, well, if it's over asking price, I'm not going to do that. And I think your whole point that I'm hearing is, let's look at it holistically and say, from a financial perspective, what makes the most sense? If rates are going to rise, if it's going to appreciate, and again, we don't have a crystal ball, we can't guarantee those things, but if you look at what's going on in the market, then you start, I think, looking at it more rationally. But the problem is, borrowers get caught up into the emotion. They want to get that house. The wife loved this house. The guy loved the big backyard, and people get into that. So it's been some of the challenges. Let's talk about some of the other hurdles that, as a loan officer, you've had to overcome, right? Some of your borrowers don't want to meet with you live. You got to do more things remotely. Walk me through kind of that process, because I think that's been a learning curve all through COVID for loan officers to be able to work remotely and not have that one-to-one face-to-face interaction.
Right. That's a good point. I came from before the computers were really prevalent in the mortgage industry, and then so I used to meet with all my clients face to face. And when COVID hit and we were all sent home, so to speak, and we couldn't meet with people, it created, thankfully, I had the ability, I had good internet, I had to have good internet. My company has good internal software. So it was really getting the clients used to not being belly to belly, face to face. It was making sure the uploading of the documents was done in a secure manner. It was giving them that warm and fuzzy feeling on, okay, I can still do this even if I can't hand Jeff the documents or somebody on his team the documents. It's still giving them that warm and fuzzy feeling that it's all going to be okay, and it will turn out just like it would in the old days when you were face to face.
Well, and you make so many good points there. I want to kind of break down some of those points that you've mentioned, because I think they're critical. One, it's still all about developing a rapport and relationship with your borrower, right? I mean,
correct.
Too many times, and I've said this numerous times on the show, that so many times the mortgage industry has been very transaction focused. Get the Smith file in, get the Smith file out, get the Jones file in, get the Jones file out. And I think the LOs that are winning, like yourself, are the one that want to foster that personal relationship, that there is that trust, there is that built-in, hey, I feel good, I know Jeff is going to do right by me and he's going to give me the right advice. And yes, I should go over the asking price. No, in this situation, I shouldn't. Here's why a cash out refi may work better. I think that's one of the big impacts. But one of the other things that I want to, kind of drill in little bit more is some of the technology. For one, I think that helped is everyone had to get accustomed to being remote. So
Zoom was a new word.
Yes, and people learned how to Zoom, and they got on FaceTime, and they got on Teams, and they used GoToMeeting. So I think the borrower started getting conditioned out of necessity, right? I mean, grandparents were getting their grandkids, and they're doing video conferencing and all of that. But let's talk about some of the other tech, right? We're on the Fintech Hunting Podcast. Let's talk about what is some of the essential technology that a loan officer needs to have so that they can deliver a great borrower experience.
That's a good question. I think you have to have we have to have access to some of the MBS highway, because that's by being able to take a look at what Barry Habib is coming to and where the mortgage-backed securities are going. That allows us to give the confidence to the borrower that they're making the correct decision. The next part of that, and this really helped out, was using Mortgage Coach and being able to give a total cost analysis to almost every single client over the past 2 or 3 years. And that allows the clients to really know if they're making a right decision, not only today, because that's really important, but 5 years or 7 years into the future. How long do they plan on being plan on being in that house? Because I think nationally, most clients are in a home, or homeowners own their home or have a mortgage 5 to 7 years. It's a little bit less in DC because it's such a transitory area. And then
Right.
The third part of that would be the video. I had never been on video. Well, never's not but rarely was I on video before March of 2020, and now I'm on video probably every day.
Well, so we'll talk about video in a second. Let's dive a little bit deeper into, and you gave some great insight of some of the tools you need, especially on the front end, that's going to give you the information so that you can help your borrower make a more informed decision. Let's talk about some of the tools that are on the back end, that we don't always highlight, but are critical for you to be able to do what you need to do. An online application, a point of sale system, a CRM, loan origination system. Kind of walk me through some of those tools that you go in, day out, so that you can provide a great customer experience.
Okay, so, my company, Atlantic Coast Mortgage, uses Simple Nexus as it's actually the client-facing portal. They go in and they fill out the application. It really walks them through step by step through the whole process. And then we use Encompass. Those two, I guess they have some sort of API that connects them together on the backside, and it pulls all the documents through into the loan application. And I think this next part is, depending upon the demographic, older borrowers, not so much. Younger borrowers, they're more apt to, because the system will allow them to, it doesn't store any documents or store any passwords, but they can actually pull in bank statements, their retirement account. And so that really reduces the amount of document gathering, what again goes back to making the process for them much, much more enjoyable.
Well, I think you made an excellent point, and I hope those who are listening take notes. But what you're really hinting at is when you can get direct data sources, a number of things happen to improve the borrower experience. For one, if I'm the borrower and I don't have to keep sending you, and here's all the PDFs, and I'm scanning it off of my printer, or I'm taking pictures off of my phone, and I'm spending 2 hours to send it all to you electronically, that didn't make a great experience for me. But if you can connect the accounts and those direct data sources, and it flows right within to your system, it makes life a lot easier, and it also makes sure that you have better and more clean data. Would you agree with that?
100%. And I'm not involved in a lot of this, but the Fannie Mae's came out with their day one certainty, which they're automatically verifying with the proper credentials, verifying client's information up front. And so instead of needing two years W-2s, you might only need one. You're pulling in their bank statements, and that's going to give us the ability with 1 or 2 touches later, if we need to update that data without the client having to go on and do anything. We click a button, they click OK, and everything just is sucked in and updated automatically. So that just clear data, and the data points are much, much stronger, which gives everybody a better loan application.
Well, and I love that about it's a better loan application. And if the loan application is better and more transparent, you've made it easier for the borrower to do business with you. Right?
Correct.
And yep. I love your perspective as a loan officer that, hey, I don't have to get into the weeds of all of that. I don't have to know every conceivable thing about technology. I know where I need to log in. I know where I need to pull my borrower data. I know how to show the borrower where to go. They have the online experience. And if you can let it continue to flow through your systems and have good turn times, deliver a good experience, that's what's going to really leave a lasting impression with that borrower.
100%. And the IT people they're the real kings, and they're the heroes, because they're working on making sure all of these things, because nothing works right all the time. And when they're on the back end clearing up stuff before we even know it breaks, again, it all comes down to the customer experience.
Awesome. So we've talked about customer experience. We've talked about some of the technology. Most of the economists are predicting that refis are going to slow down. Probably there's going to be about 60% less refis in 2022. But the good news is purchases are going to go up at least probably 30 to 35%.
Right.
When we start talking purchases, I think everyone instantly says, we've really got to work with the realtors. Okay, that's
Right.
great. That's kind of nonsensical. I mean, or it's common sense. We all get it. But what are some of the ways, and why is it so important to work with the realtors? And what are some of the things you do to foster and grow those realtor relationships?
Well, realtors are typically the first point of contact in the whole buying process. So I think Zillow did a survey, and the 70 or 80% of the people work with the first realtor that they find online. It used to be referrals. So having that relationship with them, knowing that you're going to take care of their client, because if I mess up, it reflects badly on them. And if we do an excellent job, it makes them look, well, good as well. So that's key. Some of the things that we're doing is we use a CRM called Total Expert, and that automates and sends out a lot of the data to the realtor, because it really is a triangle these days. You have to have communication between everybody involved, and being able to do that seamlessly, along with doing it the old-fashioned way, is picking up phones and calling people on Tuesdays to give them their updates. Those are what really make the realtor the focal point of the whole process, because without them, we probably wouldn't be talking to that borrower. A lot of loan officers are trying to get on the other side of that coin and be able to reciprocate with the referrals as well. But really, most of the clients come from the realtor.
Well, and because most of them come from the realtor, having that relationship, that trust, right? Because I think you said it so eloquently of, hey, they're the one who really owns the relationship with the borrower. And if we don't do a good job, that's a poor reflection on them. So what are some of the ways that you can keep the realtor updated in addition to the borrower? What are some of the tools that you use? How do you really continue to foster that realtor relationship?
Well, mine is done in a couple of different ways. I mentioned our automation that sends out information to the borrowers and the realtors. But I also send out a weekly video updating them on what's going on with the process, telling them where the appraisal is. And then I also pick up the phone and call them on Tuesdays to give them an update. Even if there is no update, they're wondering if there's an update. So by being able to take that off of their plate, it allows them to concentrate on what they really need to do, which is growing their business, not worrying about what's going on with the mortgage.
Jeff, you just gave some great insights there. Hope people are taking notes. You mentioned a number of things, right? There's automation that's allowing you to send out emails or text, and in those texts, there can be videos. So you're using some of the latest technologies out there, but you're also picking up the phone. And what I hear more than anything is you're keeping that line of communication open. You're keeping them overly informed. Like you said, I love how you said it. Even if there's no update, I want to give them an update that there was no update. Right? Because they're thinking about it. Well, what's going on with the loan? Why didn't Jeff get back to me? Doesn't he have a status update? And if you just call and say, nothing's changed, everything's moving fine, that transparency builds an awful lot of trust.
It does. And I've heard back. One of the things I started doing later, a couple years back, was I would ask the realtor, how do you like to be communicated with? Again, it goes back to making sure we're all on the same team. Most of them like the text. They prefer not to get the phone call, but I still do the text and the phone calls and the videos, and it seems to keep everybody satisfied.
I love it. Let's talk video a little bit, because I coach a number of loan officers, and there's just some people that are like, Michael, I don't love technology. I don't really want to do video or anything. And I was teaching a class yesterday, and I shared a statistic. And I forget who the source was, so I apologize for that. But they were hinting at, I'll paraphrase it, 82 to 84% of all internet traffic next year will be video.
Oh, I can believe that.
So if people aren't embracing video, they're going to get left behind. So the other question I always get is, okay, if I'm going to use video, Michael, what do I say? How do I create content? What am I supposed to give people a little indication of what are some of the things you share in the videos? How do you add value to the relationship either with the borrower or with the realtor through the videos?
Well, the value is really keeping them up to date in where I come from. We all, as a loan officer, we all have those 5 or 10 or questions from realtors and from borrowers that they always ask. So that was a big ask, was figuring out what those were and then making a short video so you can do a one-off. If I'm always saying something, if I'm getting the same question, I can make a one-off video, put that in, personalize it, and then I can send that out, which saves me time, and it still gives the client and or the realtor the update that they're looking for. So I sat down and just wrote down all the questions that I've been getting, and I try to make a video for that. That's been helpful.
I love it, and that was probably one of the best tips I've heard for when people say, well, Michael, what do I do to reach out to the realtors? You talked about, well, what are the questions you always get asked? What are the 3 or 4 questions every first-time home buyer asks? What's entailed with a self-employed person? What do they need to know so that they can get the information to you to get a loan? And when you start thinking of stuff you do every day to impact it, you covered it. And then I love your other part, and I think a lot of people miss this when we start talking automation and everything, but if people want to grow, they have to find ways to duplicate their efforts. Right. Otherwise, they're always capped out with how much time and hours in a day, right? Correct. So you mentioned you can still make it very warm, very personal, but you don't necessarily have to mention the person's name. So I could use that introductory welcome video, or I could do the video that explains what a VOE is, because most people don't know a VOE. So you got to explain what is a verification of employment. But when you do that in an excited and a passionate, in an engaging way, it still comes across as very personal, but that can be sent out to 10 borrowers, 100 borrowers, 1,000 borrowers, and now you can reach more people and serve more people and help more people in that way. Jeff, I love it. You have great insights. You and I can keep rolling. I've got 1 or 2 last questions as we're winding down. But what do you see is in store for 2022 as a loan officer? What are you excited about, or is there some things that you're still not quite sure? Give me a little, what you see as kind of upcoming in 2022.
Well, obviously, refis, as you mentioned, are going to drop. The Mortgage Bankers Association came out, and it's like 60% drop, like you mentioned. Purchases, everybody will always purchase because people are always going to be moving in and out of the area, whatever area you are in the country. So that's always going to be, whether the interest rates are at 2.5 or 4.5, people are still going to be moving out in and out of the area. So that'll help. I feel that, again, I'm lucky to live where I live because that gives us a little bit of a safety net that the government's right around the corner, big businesses here. So I think even with the interest rates ticking upwards, which they are, inflation's going up, I still think there's going to be a robust purchase market, and just being able to help as many people as we can and give them the right options to whether if they want to buy or not buy. That's really what excites me about the whole mortgage industry. It's doing it this long, being able to help people, whether it's hard to say no or it's hard to recommend a no, but if that no turns into a yes in a year because they're better able to, they'll have more cash in the bank for liquid reserves, things like that. That really helps me. That's why I've stuck around this long. I just really enjoy doing that.
I love it, and that's why I'm so glad you could join me today on this episode. For people that want to get a hold of you, who want to find out more information, if there's realtors listening and they want to find out a good loan officer in your area, what's the best way for anyone to be able to get a hold of you, Jeff?
They could shoot me an email at my at jeff@jtlending.com, or they can shoot me a text at my cell at 703-338-4020. They all work. I get stalked everywhere.
Outstanding. Jeff, thank you so much for joining this episode of the Fintech Hunting Podcast.
Thank you, Mike. I appreciate it.
All right.